What is good, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with the overall market, what you should be watching for moving forward. I'm also going to talk about some very important technicals for Tesla, SPY, Nvidia, the QQQ, and a couple of other tickers, and talk about some very important levels to watch for what's likely going to happen as time goes on. But before I break anything down all this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. Now, this offer ends in just 12 hours, so check it out before they run out. Anyways, let's break down what's going on with the market. So, we had another sell off that happened on Friday as the market continued to drop, and we started to see the same thing for Tesla and all these different tickers. But when we look at the technicals, something very interesting is developing on SPY and all these different stocks. I just wanted to break that down in the context of all the information that's coming out. So for tomorrow, there's not really too much data coming out 1 hour before the market opens. We have the New York Empire State Manufacturing Index. Nothing too crazy, nothing too major. It's not going to cause anything too big, in my opinion. But then later on, I would say about an hour after the market opens, we have at 10:30 a.m. Eastern Time, Harker giving a speech from the Fed. Harker is going to be talking. Whatever they say could cause some volatility here and there. So we're going to be watching for that. But what's going to affect how we open tomorrow and what's going to have a bigger effect, in my opinion, is going to be earnings. Because although we only have a few tomorrow morning for Monday, we actually have Charles Schwab's earnings. This could be a little bit telling for how the banks are doing and other sectors. Now, the reason why this is important for the finance sector is because you have to consider that during the last set of earnings that we got, most of the banks did relatively well on paper. Okay, and I'm saying on paper because I do find the estimates a little bit sketch. The estimates seem to have been lowered quite a bit just to make the banks look even better than how good they actually were. That's just my honest view. But the truth is, I mean, let's just be real here. The banks technically beat earnings. The last time this came out on Friday, right, we saw, PNC, Wells Fargo, JP Morgan Chase, and etc. They were beating on the estimates. And that helped the market, at least to some extent in the morning before the market started to slow down. So for tomorrow now, right, for Monday, we have Charles Schwab's turn. There's a good chance they're going to do well, in my opinion, seeing how low the estimates are. And if they, do well, this could help the market just a little bit with a small little rebound. I'm not saying it's going to happen or last forever. I'm simply saying that the market's going to get a small rebound, and we're going to be watching to see if the market could break some resistances to try to turn bullish. If it fails, then it's going to turn bearish, just like how it did over the last few days. I'm going to map that out in the charts just in a few minutes. Last but not least, I just want to mention that we have this news coming out that today's stock market looks like the 1987s, but that does not mean an October crash is imminent. So honestly, guys, I don't really agree with the whole notion of just like comparing the patterns exactly with what has happened in the past, because I think that patterns do work in the markets. Algorithms do trade in patterns, but not entirely, because you have to remember that we can't just compare every single crash as if they're in the same circumstances. We're not in 1987. Circumstances have changed from a geopolitical standpoint, and the market is now run by different people, different algorithms, and different events, and the market could still be even more irrational than before. All right, because it's a very manipulated market. And I would say that the markets are even more manipulated than what they were like in the past, especially with all these retail traders now joining in. So just because a previous fractal or a previous pattern played out in 1987 or 2008 or whatever, it does not guarantee we have to do the exact same thing. And do not let that fool you. Now, is it still possible for the stock market to crash? Yeah, it could still happen if we get some kind of catalyst. For now, in my view, I don't really see the catalyst that the market's going to look at that way to crash for the end of the year. You guys know my view that the market's going to likely rally for November/December, but uh, we'll just see if any new news comes out to change that. As of right now, I'm not seeing that, so I'm still leaning in that direction. All right, anyways, enough about what's happening with the longer term. Let's now talk about tomorrow specifically. What on earth is going on with the charts? So looking at SPY, we have this channel, this downwards channel on the hourly time frame. I also want to mention, excuse me, that on the 30 minutes time frame of a bullish divergence that has developed. So I'm going to be looking for a bounce most likely for Monday. However, that does not mean it has to be a big bounce. I'm not calling a huge bounce. I'm not saying I'm a perma bull. I'm simply saying that a very, very technical bounce could be coming. after the amount of selling we saw on Thursday/Friday. And we could see this trend continue because what we kind of did is we like pumped in the morning, then we started selling off. We pumped in the morning and sold off. So are we going to pump first and then sell off? Or are we just going to try to hold these levels? This is going to depend on how we react to this resistance right here. So we have this downwards channel. I believe that SPY is going to make a rebound towards this 433 area, almost 434. But there's no guarantee we're going to hold this level. If we reject off this, there could be another big sell-off coming back down to like 427 or so. That's going to be the next key support. I also called this out using some Fibonacci's yesterday. I'm not going to do that today, but I just wanted to mention that we have the mathematics behind that potential move. And if we end up breaking this yellow trend line, this is going to be your bullish case. If we break this, you're going to turn bullish, right? Then we could be pushing back up to like 435. If we break this resistance right here, I'm going to change the color so I can like color code these so it's easier for you to like read them. So if we break above this blue trend line right here, the blue one right here, we turn bullish. If we reject off of this, hey, we're going to come right back down most likely. So we're going to be watching this test right here. This is going to be our key level right here. I believe that's going to be coming for tomorrow, so watch that resistance. What's interesting is the QQQ has almost the exact same thing developing. Now, the QQQ also sold off quite aggressively, and you could argue that this sort of resembles like a falling wedge, but it's not perfect. But either way, it doesn't really matter. The triple Q could be seeing a little rebound with Tesla. I think Tesla may try to lead us up going into its earnings. But if Tesla gets a crash, a rug pull after earnings, this could slow the whole market down too. So you want to be very careful. Now, from a technical standpoint, so long as this channel remains that the QQQ is on the hourly time frame, we could see a bounce and a rebound towards this 367 to 36, I would say like 367-ish area. And if you want to be bullish, I mean, you want to be watching this potentially break to get back up to at least 368. If we break that, then 370 is on the table. If we reject off this trend line, which is going to be, depending on where we are, maybe very close to like 367. If we break below 366, that's going to be confirmation this thing is going to start rejecting, and we're going to make our way back down to these lows. So you're going to be watching that very, very carefully. Watch and see this trend line. But the bottom line is I'm confident we're going to see this thing attempt to bounce just a little bit before anything happens. That's the most likely case, so long as there's no major bad news tomorrow. But that's the most likely move from a technical analysis standpoint. For Nvidia, something similar may develop. If you look at Nvidia, if you could zoom out using the 4-hour time frame, etc., but there is possibly more downside potential. We may pump first for Monday, maybe even a part of Tuesday, and there could be downside coming a little later, but it depends on how we react to these trend lines. So like I was saying in my earlier videos, there could be more downside for the market during this week. We may start off a little strong, but things could change depending on earnings, depending on Tesla's earnings and technicals. So Nvidia is at this support trend line right here. We're also very close to this white trend line, which is our historical support from this previous low, or at least many previous lows from here. So we're going to be watching this confluence of support on Nvidia. We're still, even though we are like a little below it, it could still rebound quickly and still make its way back up. So my gut is telling me we're going to see this thing attempts to bounce. And we can also look at, let me just double check our trend line right here and also our divergences. Let's just see if there's any divergence on Nvidia. I'm not really seeing much of a divergence, but there's a possible like falling wedge that's forming on it. But the bottom line is, I think we have a small one right here. There's actually a possible one right here. But anyways, it doesn't really matter because I do believe that there's a chance we're going to make an attempt to rebound just a bit, try to retest this like 460 area first before we see another rejection. Or if it tries to break this, this would be like the bullish case. So we're going to be watching this trend line very carefully for a potential test of 460. And if you want to be bearish, like super bearish, you want to see it break and hold below 450 to make our way back down to the mid 440 area, like 444 is going to be tested down here if we break. I'm not really counting on that. I think the odds do favor a bounce first before we end up breaking down. So that's the direction I'm leaning in. But that does not mean that it's going to bounce forever. We're just going to be watching that test as time goes on. Now, Apple has a possible head and shoulders developing on it. So if you look at Apple, I mean, what could be forming is, I'm not going to like guarantee this part, but what could be forming is we have this like demand zone down here, right? All the way down to this 178 to 177.5 area. We might rebound off this on Apple, make our way back up towards this resistance around 179.68 to 180. And this could be forming a head and shoulders. So we're going to be watching this resistance right here very carefully. I'll watch and see if Apple does this, and we will see if Apple rejects or not. If we get the rejection, there is going to be potential for Apple to sink even lower to much lower levels like this. If it manages to hold and we start pushing higher, then that could be a change in the structure. So we're going to be watching this carefully. There is potential for rejection, so be very careful if we get this rejection right here. So watch and see how Apple reacts. Last but not least, I know what everyone's waiting for is Tesla. Tesla is once again on a slight downtrend. Now, the thing about Tesla is we actually formed a bullish divergence on Tesla on the 30 minutes time frame. This was on the RSI. As you guys can see it right here on the RSI, we have a bullish divergence. So I think Tesla's going to try to bounce because of its earnings, and Tesla's going to try to make its way back up to 255 to 257 to retest this trend line. And it might end up trying to break the trend line. There's a possibility of that, maybe an attempt to try to break it. If it does, it could turn a little bit more bullish going into its earnings, but then we will see what happens after earnings. Now, there's one thing that does concern me for the bulls, and that is there's a possible head and shoulders on Tesla. We have like a left shoulder here, we have a head right here, then we have like a possible right shoulder that could be forming if we do get a bounce off this area. That's going to help us like approach this like neckline and then bounce from there. But the point is, look, when you have these levels and you have this like trend developing on Tesla, this could lead to a big change in the way this thing ends up moving. Now, with Tesla looking this way, with Tesla on this downtrend, I would argue that the odds do favor this little bounce off the bullish divergence, and I think it's going to retest 257 or so. But then we will see if Tesla rejects off the trend line or not. So we're going to be watching this. I'm going to change the color of this trend line again so I can color code it. I know I keep doing that, guys. I just want to make this very understandable. We're going to make this probably just like red. I think red's not a nice color. Maybe just like white would be better. So white, see the white trend line right here. So it's easier to distinguish them. If Tesla rejects off this, it could remain bearish. If we break above this, we could see this thing push back into the 262 area. Now, there's a chance it's going to try to push up approaching its earnings, but be very careful. If Tesla's guidance is not the best, this thing could get a big rug pull, and you want to be very careful going into earnings with formations like this. Okay, so we want to be open-minded. We're going to be waiting to see what happens to Tesla. Be very careful with the possible head and shoulders forming. But before we talk about earnings and anything like that, just know this thing may rebound first approaching earnings. And I think it's going to likely start tomorrow, just temporarily. So watch for that potential bounce. I think that's pretty much it when it comes to like the stocks I typically go over on TradingView. Now I just want to transition to Webull just to be faster and much more brief with the rest of them. So for the IWM, or our Russell 2000, we have a very slight bullish divergence that has developed. So look for a little rebound towards this 171.48 area. Could there be more downside for the future? Yes, there could be later on during the week, but temporarily, okay, I'm just saying temporarily for Monday, this thing is going to attempt to go back up to 171.48, the 50 EMA, in my opinion. And we'll see if that breaks. If it breaks, then 172 is on the table. But look for a little rebound first before anything. Like I said, for Apple, I didn't call this out, but there's also a bullish divergence on Apple. So it might try to rebound towards 180. We'll see if a head and shoulders is forming. So be very careful with that. For Microsoft, I just wanted to call out on the 4-hour time frame. It's on a downtrend, but it's approaching this support at the 15,200 EMAs. So we're going to be watching. Actually, we technically have a bullish divergence here on the 4-hour time frame. So it could just try to bounce from here. I could see it attempting to bounce soon. Just a very small bounce, guys, a very small one. And if it rejects off our 50 EMA to retest 329, we could still come right back down. So look out for a potential tiny rebound, a small little, defensive bounce, and it may fail because we are still looking bearish on the PPO. So it might try to make a little rebound, then fail and come right back down lower, right? Just like what happened on Friday, that could end up playing out. So you just want to be very, very careful with this. There could be more downside anyway. So look for a little bounce and possibly a drop on this. That's what the odds do favor. For AMD, I think this thing also formed a bullish divergence. Let me just double check it. So yes, we technically have one, but it's not that clean. Look for a retest of 105.5 to 106.64, this entire like zone. And then it could get a rejection from like a head and shoulders. So like right here, we have like a possible left shoulder. We have a head and then a right shoulder possibly forming. So I could see a little rebound for AMD, a little bounce, then a drop just like Microsoft. I think that's very possible. And this trend is looking a bit more bearish. There's no confirmation of some kind of bounce yet. Now, the VIX is up over 15%, but the VIX also has a bearish divergence. The VIX may kind of like downtrend just a little bit as the market bounces, but that does not mean the VIX is going to drop forever. The VIX could, let me just draw this out for you. The VIX could do something like where it drops a little bit like this, retest the 17 area, maybe a little bit higher than that. Maybe it's the 17.84-ish area around there. And then this thing gets one more rebound later on as time goes on, like this. So because of the VIX potentially dropping initially, this could be because of the market pumping first. Once it reaches the support right here, we could get a rebound back up to resistance. And that's going to be because of the market potentially dropping later on over the next few days. So what does that mean? The stock market may bounce tomorrow temporarily. It may even go into like Tuesday for the bounce. But then later on, Wednesday, Thursday, Friday, there could be downside still coming. That's what the VIX is kind of like suggesting. The dollar, let me double check the dollar. There's a possible like rising wedge on the dollar. It's a little hard to see. I'm going to pull up the 30 minutes time frame. Maybe it's easier for you guys to see it if I do it that way. We have a possible rising wedge. I would say maybe the 2 hour would be the best time frame for this. So with this rising wedge on the dollar, this could mean that the dollar may be seeing some downside relatively soon. And if the dollar does start dropping, right, this would likely lead to more potential upside for the stock market. So I just wanted to warn you all about that. There's a real possibility of that potentially happening. And I think it's very important to be very open-minded to this, because the dollar does get some kind of rejection off this bearish divergence and this rising wedge-like pattern. This could lead to upside for the markets. So this tells me there's a bounce that's very likely to come. However, like I said before, I mean, I'm not saying the bounce is going to last. It could just be a very temporary bounce, very temporary short-term bounce that's defensive. For Coinbase, we also happen to have this potential bullish divergence. It could be making its way up to this 20 EMA at 75, and then 76.5 is a possibility for tomorrow before this thing rejects. So watch that very carefully. Look for Google to also make an attempt to rebound off this bullish divergence. I could see this thing retest 139, but maybe reject. It's still on a strong downtrend. We have like a head and shoulders. So I could see like it retesting this like right shoulder that's forming to hit like a retest of 140, 139.9. And then it could be forming a head and shoulders for more downside later. So a little rebound and then a drop is possible for Google. For the 10-year treasury yield, this thing, if this thing were to drop more, this could help the markets. On a slight downtrend, it's kind of like trading sideways right now, very indecisive. It does have this unfilled gap, so we'll see if this fills later or not, but it's looking very flat, so we'll see what this does. For Amazon, let me just zoom out a little bit for 1 second, guys. I would say that this is looking like it's going to attempt to retest 130. We could get a little back test. Uh, in my opinion, look for a little back test towards this 130 area, because on the 30 minutes time frame, it also formed a bullish divergence. So I could see 130.79 to 132 being retested, and then it could reject because we have like a head and shoulders like pattern. So look for a little bounce, then a rejection on Amazon. That's a real possibility. Watch for 130.79, then 132, and maybe rejections at one of those levels. And for Meta has a bullish divergence. It should bounce towards 318 at the very least. That's where we have our 200 EMA on the 30 minutes time frame. So I think we're going to be watching 318 on Meta at least, and then this thing could reject off that, or it could go a little higher. It all depends on the test. The reason I said reject is because of this bearish structure. We have a possible head and shoulders like structure, which could lead this to continue to drop. So look for a bounce and a drop on Meta. It's going to rebound a little bit temporarily, most likely, and then we could see downside later. All right, guys. Anyways, that's it for the video. I thank you all so much for listening. I hope this video is very helpful for people out there who are interested in technicals and just want to see what the market could do for tomorrow. Just based off technicals and other probable outcomes, such as like, Charles Schwab beating earnings and things like that. So have a great day. Enjoy your Sunday. Do what you have to do. And I'll see you guys tomorrow morning for the next video as we talk about Charles Schwab's earnings and the pre-market for the stock market. All right. Have a good one, guys. I'll see you guys very soon, and peace out.